Welcome to the Wealth by Choice podcast. My name is Valerie Shira, and I'm a stay-at-home mom who turned entrepreneur. Each week, we bring you stories and wisdom from individuals who have broken the code to generating wealth. Thanks so much for being here with me today. Let's get started. All right, welcome to the Wealth by Choice podcast. Today, I have a really special guest, a mentor and a personal friend, Hadar Orkibi. I'm really excited. Hadar is a U.S. citizen, a full-time property investor and trader. He's been investing in real estate for over 2 decades with a focus on multifamily apartment investings that have value add upside potential. Hadar invests in multifamily, residential, and commercial, triple net leases real estate, and is a regular participant as a guest in U.S. real estate investing podcasts. Over the years, Hadar has implemented different strategies, which include house flipping, subdivision, new construction, commercial real estate, joint ventures, and multifamily investing. Hadar enjoys helping both seasoned real estate investors and those who are new to real estate investing reach their wealth, income, and portfolio goals through multifamily real estate investing. Hadar loves real estate investing and the freedom that it creates. His specialties are in asset management, investment underwriting, and project management. Hadar, I'm honored to have you on the show today. I really appreciate you as my mentor and friend. Thanks so much for joining us today.
Thank you, Valerie. Thanks for having me. It's great to be here.
Well, maybe we could start by, for those of you who are listening may not know you, can you tell me just a little bit about your background and what kind of brought you into this world of investing?
All right. So, I was born and raised in Israel. I was actually born and raised in this house when I'm sitting right here in the garden right now. I'm visiting my parents here in Tel Aviv, in Israel. This year, my dad is going to turn 90 and my mom is going to turn 80. So I'm kind of made the decision that moving forward, I'll try and visit them at least once or twice a year if I can. And I started in Israel as a licensed real estate agent back in the day, in the early, I think it was about 2000, and got the license, kind of wanted to have a feel for it because my dad, he was an old school investor. He started buying apartments here in Israel, in Tel Aviv, in the early 80s, slowly paying cash for it, no debt, no nothing, over a period of many years. And I used to go and help him around, go and paint the apartment, sometimes go and sit in the car while he go up and collect some checks and bits and pieces like that. And it always interests me to see the freedom that a passive income could create. And I wanted to get my feet wet in real estate, and not having capital when I was in Israel, the only way to kind of have a taste for it was not only helping my dad painting his apartments and doing bits and pieces work on the apartment sometime, but was to really go and try and get a license. So I got a license, and I got licensed real estate agent for the Ministry of Justice. It's kind of the process here. So I used to do mainly renting. I mainly used to do renting. I've done it for about a couple of years, and after about 2 years of doing it, I already had my girlfriend back then, but now wife, here in Israel. We actually moved to New Zealand. And when we moved to New Zealand, I went there, and I still had the real estate bug in me, but I kind of always knew that being an agent for me is not the best fit, because I wanted to actually be on the other side of the spectrum, if you like, really making the big bucks from actually owning real estate and having the passive income, and having the passive income giving me the freedom that it creates, in opposed for working for the 9 to 5 and chasing the deals. As we know, it's not an easy job to be an agent. You're always prospecting for deals, and you're always prospecting for listings, and it's very demanding. So in New Zealand, once I moved there, I was educating myself about the market over there. I was back then doing a lot. When I first immigrated there, I did a lot of manual labor, working in the vineyards and orchards of Central Otago, working with a MP3 player and listening to CDs and subscribe to the local magazine, and join the local RIAs over there, the Real Estate Investors Associations. And then slowly but surely started trading property as a wholesaler. You know, I covered a lot of this in previous podcasts that I've done quite a bit, but moving forward, I started building a portfolio. I accumulated some deposits, and I accumulated a portfolio of small multifamilies because in New Zealand there is no opportunity to buy a purpose-built apartments. But I always knew that I want multiple income properties because, with multifamily, the reason we like it so much is that if you have a vacancy, you really need to let's say you have 10 units. If you have 2 units vacant, you're still going to be able to cash flow and you're still going to be able to pay off the mortgage. So that's one of the reasons that we love multifamily so much. And I also invested in commercial real estate over there, mainly triple net lease, multiple income. Again, I got a strip mall over there with a 4-shop and apartment on the top. And again, that's a multiple income stream. So we like to have multiple income stream. We see it as less risky. And slowly but surely, I kind of built a portfolio in New Zealand. About 6-7 years ago, I got to the point that my portfolio in New Zealand really appreciated quite a lot, but the market matured. It became more like LA, New York, Boston, Seattle, those markets when the cap rates and the yields are really compressed, more of an appreciation market. So I kind of felt that because the median house price was $1 million, and because it was very tough to actually get in and buy an asset which will be cash flowing when you're looking at assets that the return are so low, I looked further afield. I looked into the States. I started to get myself educated. My mother is an American citizen, so she was born and raised in Chicago. So that allowed me to not only travel freely to the States, but also allowed me to borrow money in the States. So I traveled to the States. I did my market research. I went to a few markets. For example, I went to Jacksonville, Florida. I went to Salt Lake Cities. I went to Memphis and a few other markets. And once I choose my market, I kind of started small. I got my feet wet. I started with a 3 units, a 4 units. And then I also joined a coaching program that really helped me to gain confidence and learn what I don't know and learn from my mentor's experience, in that case, Jake and Gino. I was making it happen, if you like, being relatively successful and finding deals. And I implemented my wholesaling strategies in the States. So I was doing a lot of direct to seller basically. And I implemented that and I was able to score some good deals. And then I started back then also a coach for Jake and Gino because, somebody in the East Coast on the West Coast could not give an excuse that they can't travel to Florida or Alabama, if you like, 3 or 4 hours flight, while Hadar is flying from New Zealand a 25 hours journey. So I really enjoyed that. I learned a lot, and I joined that community, and it really helped me. And the rest is history. I remember my first deal was a 45 units apartment community, off market, broker, pocket listing, if you like. And that was really the life-changing deals. I still remember today speaking with my coach back then, Gino, who told me, this is a life-changing deal. I felt resistant. I felt, it's too big. There's a lot of loss to lease. The entry cap rate, so the numbers weren't quite there when we bought it. When I bought it on my own, because the rents were so much below on the market. There was significantly under market, and the debt cover ratio was kind of just about there. I think it was about 1.2%, maybe a little bit below. But the upside was substantial. So I had a bit of resistance. I had a bit of fear, what if it goes wrong? But I've done all the education. I knew the market, and I just needed to get that push and a confidence that back then Gino gave me and told me, look, go for it. It's a no-brainer. And from there, really, everything started going uphill and in terms of positive growth, and really started picking up momentum for me.
Wow, yeah, that's a lot. I mean, that's a huge span of a lot of years. And I think sometimes when people look at things, they, might look at a few years, but you've given like the whole scope of from beginning to end and the whole journey. And there's a lot of steps within there. Going back to like the very beginning, when you became a real estate agent, what would you say for somebody starting now? Like, what's the best way to get into it if you're not sure, you've got those fears, you don't even know what you're doing? Is it getting your real estate license? Is it trying to get a house at a house hack? Is it just getting education? What would you say to somebody who's just starting out?
I think the first thing to do is to get yourself educated and surround yourself with like-minded people.
Sure.
Because you don't know what you don't know, and if you don't know what you're doing, you got more room for errors, and you're not going to have the confidence to actually pull the trigger, or you're not going to even know the opportunity when it's maybe just lying in front of you. So I think house hacking, as you mentioned, it's a great thing to do. If you're starting out and you're able to find a duplex or a triplex or a fourplex, I think that would be a great investment opportunity. Preferably, I would say I would rather get into a triplex or a duplex, which is 3 units or 4 units. And the reason is because, again, if you buy a fourplex, you live in one apartment, or maybe you buy something which is a townhouse style. So you'll have 4 adjoining townhouses, could be 1,000 square foot or 1,200 square foot each with a garage. Could be something quite spacious, even if you have a kid or two. And then you have 3 other tenants paying your mortgage. So in effect, they might be paying your mortgage and giving you cash flow. And another great thing about it, that when you go to the 3 or 4 units, you're still under the commercial grade in terms of the loan borrowing. So you can really get in with a very favorable long terms. You can get a potentially a home buyer's loans, which is very low down payment. I believe nowadays it's 3%, or you can even get, for example, a 30 years amortization, fixed rate, which will be, obviously now rates are a little bit higher than they used to be, but when I started buying, rates were anything still between 3 to 4.5%. So you can really have the certainty by actually locking in a rate for a long time and having a long-term 30 years amortization. So I think there's a lot of benefits starting with that. And I think it's a great idea because it's usually will be more affordable than going into 20 units or 50 units. And it's something that you can take down and you house hack it. Basically, the tenants are going to pay you, so you are actually going to save on your monthly living expenses, which will allow you to have more money if you have a W-2 to keep investing, or at least invest in your education.
Yeah, I love that. And I mean, dealing with that fear, that initial fear is huge, because fear is crippling, absolutely crippling. I mean, I remember when we bought our first property, which was a fourplex. We're under contract, we're getting close, and then I just start getting nervous. I'm getting scared. I'm saying, Jonathan, I don't know if we should do this. It seemed like so much money at the time. I mean, it was only I think it was 140,000, completely furnished, fourplex. I mean, absolute no-brainer. But we'd never done it before, and so it was scary going through that. But what you're saying is basically combating that fear through education. If you've learned and you've studied, that really tackles that fear. That gives confidence to what you're doing. And then you mentioned mentors, or surrounding yourself with other people doing it. If you see people doing it over and over and over, that really boosts your confidence. And you're like, hey, if they can do it, I can do it. And then if you're hiring a mentor, or maybe you're just, like you mentioned, we went to the RIA, you're finding people who are either local or in like a mastermind or something like that. That's big to combating fear as well. So you've really covered a lot of things that would really help somebody starting out, give them the confidence to take that first step.
I also really recommend for people, and that's something that I did back in New Zealand back in the day, and in America when I started investing, is in America I started with Bigger Pockets. Bigger Pockets and podcasts like yours, many other podcasts which are teaching real estate, and there's some great books about the subject as well. But in the end of the day, a lot of people they look at the forum, they whether they participate or whether they only read some posts on the forum like Bigger Pockets or read the books. A lot of people get paralysis analysis. So they have a lot of theoretical knowledge, but they don't have the confidence or the skills or the knowledge, for example, how to create deal flow. Or they don't have the confidence to actually pull the trigger and get into the deal. And that's why I think that joining a coaching program, for example, is a very, very important, especially a coaching program that has a component of action steps tied up with accountability. Because the accountability is the glue that ties the commitments to results. It's very, very important that when you're giving, or if you write down your action steps, with your focus area. You know, in the MIH Mastermind that Marco and I run, we have 3 focus areas, and then underneath that we have the action steps that you need to do to implement those 3 focus areas, to execute the 3 focus areas. So it doesn't matter if you're moving the needle into the right direction, slowly but surely, it's fine, as long as you're moving the needle into the right direction. And what is important fact is to have a coach or a group of peers or a group of friends or people on your teams that will actually keep you accountable, that you're executing on what you need to do, that you're actually doing what you're supposed to do to keep moving the needle into the right direction. And this is the key, because a lot of people joining coaching programs, they pay significant amount of money to that, for example, just to find out that they're trying to do too much, or to find out that they haven't been able to move the needle because, you know, they were just got bogged out with life, or they didn't really have enough accountability behind them to make sure that they execute on what they're supposed to do. So I think the accountability is a very, very important part of it.
Yeah, I think you hit the nail on the head. And it's funny, Jonathan and I were just talking about this yesterday, and we were saying how sometimes you look at people who are in real estate and you'll see ones with perfect websites, perfect knowledge, they've gone deep, but they don't have a single deal. You know, I mean, they haven't done anything other than, you know, they form the LLC, they make the website, and you know, they make those things that you can just kind of keep dabbling with forever and perfecting, but they haven't actually gone into the market and bought anything. And then you have other ones who their websites look like trash. They look like, you know, they haven't really done it, but they've got deals. And we were just talking about how the difference between the doers versus the learners. And I mean, you have to spend time learning, but you, at some point, you have to implement what you're learning. When John and I are part of your mastermind, MIH, for those who don't know, and the first email I got from you, I think the first month that we joined, you were asking us, what did you do this month? Well, how's it going? I told John that, oh my word, I have to tell him what we're doing. This is like pure accountability. I mean, I don't want to tell Hadar that I've done nothing, so we got to hurry up and do something. So what you're saying is really a big part. And for those of you who don't have some type or form of accountability, you got to get it, because that makes all the difference in the world.
Yeah, absolutely. And you know, as well, Valerie, you and John just been doing great, going from strength to strength. And as well, this show that you're running, it's awesome. And the good thing about it, apart from all the other things that you're doing within real estate itself, it allows you to surround yourself with like-minded people. And as we say in the MIH, you know, we're students for life. Mm-hmm. So although I'm the co-founder of MIH with Marco, we both treat ourselves as students for life. We always educate ourselves. We always try and learn things about real estate that we need to, and keep our hand on the pulse in terms of where the market is and what strategies are right in the right phase of the cycle. And I think that is it's very important. And surrounding yourself with the right group of people will also allow you to really sometime have more of an insight to the market, because being successful in this, it's taking it seriously and actually becoming a professional investor. It's really staying in the market, having a feel for the market, and being able to monitor and have a feel for where the market is, because real estate is cyclical. As you know, now we are in a different phase when we were 2 or 3 years ago. So staying with a group like that as a long-term plan, you know, with MIH, we always say if you join the group, you're in it for life. You only, you know, the physical meetups occur maybe once or twice a year, but we always interact online, and we're always there for our members, and we all like one big family, and that's part of it. Those people who have a long-term plan and willing to network and willing to make the effort to network with the community, with the ecosystem, if you like, that's those one who really get success, because multifamily is a team sport, and it's always something that one needs to remember. A lot of people have W-2s. They don't have time to look for deals, be boots on the ground. A lot of people don't live in markets that are great, so maybe they need to do other things within a team and have a boots on the ground in the market, which makes sense, because we say you want to invest in the market that makes sense. You might be living in California where the cap rates or the returns are very low, or the tenant-landlord rules are very pro-tenants in opposed to pro-landlord, and you wouldn't want to invest over there. But you have to make sure that you're becoming part of the group when you can actually be operating in a market that makes sense and will take you where you want to be. So it's very, very important to understand that it's a team sport, and you can't do everything. You can't raise capital, you can't be boots on the ground, you can't be asset management, you can't do deal flow. You can't do all of that, especially if you have a W-2 and if you have a busy life with, a family life or so on and so forth. And that's something that we see with a lot of people who struggle, is people who are trying to do too much on their own.
Yeah, that makes sense. Something I'm wondering that I'm curious if you have any thoughts on is, do you think there's any specific skills or things that are more needed or prevalent in today's market than others? You've got underwriting, asset management, deal finder, marketing, personal brand. What should people be focusing on in this current market? Is there anything more than others?
Again, it's a team sport, so I think it's something that you require. You require all the pillars to actually hold the buildings. You need to have big foundations. That it's including all of the above. Even if you're great at finding deals, but if your asset management is lacking and you have a bad property management company, you're not going to make the deal is not going to work, because you're not keeping the property management accountable and you're not monitoring what's happening. So, but on a nutshell, to answer your question, I think that in this phase, and generally, especially if you become part of an ecosystem like a coaching program or a mastermind, I think if you're able to find deals and to underwrite, finding deals and knowing to underwrite, I think it's the main aspect. Because if you're in the right community, if you join the right community, attracting the capital or raising the money or doing a joint venture or creating a small syndication, it's not going to be hard, because a lot of people have the money, they want to invest in real estate, but as someone who wants to add value, finding the deal is the hardest thing. If you find the deals, you need to know to underwrite, because you can't present a deal to your friends or to your fellow investors. You can't present them a deal and talk about it if you actually don't know the numbers. Sure. So in my view, underwriting and creating deal flow is the key. Now let's analyze it a little bit, especially the creating deal flow. We teach the 3 pillars of deal flow. The first pillar is broker relationship, on and off market deals. Could be pocket listing, could be on market. That's the first pillar of deal flow. The second pillar is direct to seller. So we teach the whole gamuts of direct to seller. As you know, we do cold calling, we do text campaign, we do voicemail drop, we can do letter, we can do driving for dollar. That's all direct to seller. And the third pillar, but not least, they are all equally important, is the networking. How many people in MIH are doing joint venture with fellow investors, whether it's 3 investors or 4 or 5 investors together with great opportunities, just because they're part of the group and just because they are able to communicate and be invited for good opportunities. So I think that creating deal flow is very important, but being able to understand the numbers is as equally important, because you won't know what a good deal is if you don't know the numbers.
Right.
So I think those are the main things.
Yeah, that makes a lot of sense. And you have to have all the areas. You got to have somebody who understands each of those. But it does seem like as market shifts, some things are a little more in high demand. If there's a lot of deals but no money, you need those capital raisers, people who are really doing that. But as the market kind of shifts, some of those maybe high demand areas turn a little bit as well. What do you think as far as people investing in specific markets? Should somebody focus and go deep on one market? Do you kind of just go around and get involved in other markets? What are your thoughts on that, Hadar?
Okay, so I can share with you that from experience. I've been investing in Arkansas now for nearly 6 years, and I started on my own, but I would say that I'm kind of not an example for that, because I don't have a W-2, and I didn't have a W-2 for nearly 20 years. I'm 46 now, so I've been self-employed and doing real estate for a long time, and that's basically gave me the opportunity to go into the U.S. and really go all in and dedicate as much time as I needed to actually do it. Once I reached 100 units or so on my own, I actually started partnering, and that was kind of part of the momentum of my growth and part of the momentum of what the mastermind have created to me as well, with my partner, which is Hoon and Vince and Marco and that. So to answer your question, I started in Arkansas. I got to know the market like the back of my hand. We were there we were there just a a couple of months ago, and we were driving for dollar. I had a couple of MIH members join me, and we drove around, and I really showed them how we know and how we get to know the market. Basically, I know intimately most of the apartment buildings in my market, because part of the direct to seller or part of the market research or part of the driving for dollar is really identifying the opportunities or the properties that we like, and then driving them and knowing which owners own a certain apartment community, or which funds or syndication groups from around the country bought few assets in our market. So we want to know so we can approach them. And that's really getting to know your market intimately, because when you know your market intimately, you're able to make a decision pretty fast when the opportunity arises. You will know that area is not in the flood zone, for example. You know that it's a high demand area. You will know where you can take the rents to. You can know if the area is in a path of progress or not. Maybe you will actually be targeting a specific area that in high demand or in the path of progress. So knowing your market intimately is very, very important. Now, in saying that, about 3 or 4 years ago, I heard about Kansas City, and I went to Kansas City. I drove them there from Arkansas with my buddy Cole. We drove there, and we really had a good look. And I back then, it was before the MIH Mastermind, that where basically now we have network in most of the great market in the country, and we can have boots on the ground in those markets. Back then, I was kind of on my own still, and I can tell you I was struggling. I was struggling I got to know the market because I'm a good networker, so I was able to form a relationship with fellow investors and a few other relationships. Cole, my buddy, like I mentioned earlier, he had some friends there, so they actually explained the different demographics and the different markets. But I felt overwhelmed. I felt that it was difficult for me to pick up momentum because, all the broker relationship and the direct to seller and the networking that I've done in Arkansas, it was too much for me to do on my own in Kansas City as well. So the point I'm getting to is that I think first of all, it's really important to focus on one market, get yourself established in that market, and then look at another market if you're able to do that. But we bought 3 mobile home parks in Tennessee, so around Nashville, and one in Clarksville. And why did we do it? Because we helped the MIH member Abraham Anderson, 28 years old fella with now he's got 2,000 lots around Tennessee and other parts of the country. Why did we do that? Why did we go to East Tennessee? Because Abraham had the boots on the ground. We had the regional manager. He had all the infrastructure was in place. He knew the area pretty well. In fact, he told us those are the area you want to target. So we leaned on his knowledge and expertise, and we executed based on that. We helped them remotely. I was doing it from New Zealand. And by the way, if you guys don't know, I spend most of my time in New Zealand with my family. I'm just here on vacation in Israel. So, but I am traveling to the state regularly because that's part of the commitment. That's part of the business. I'm traveling to the state 3 or 4 times a year. That's the commitment that I'm doing, and that's why I was able to do what I've done and to get to where I am. So yeah, I think it's good to diversify to a different market, but I would not suggest trying to do it alone. If you have a team, and even if you're starting with a new team with MIH, we typically say, hey team, these people are focusing on the Carolinas, for example. You guys operate in that market. Once you pick up momentum in the market, maybe 2 or 3 guys out of the team, if it's a team, for example, of 7 people, 2 or 3 guys can go and start looking at another market, start forming broker relationship, start underwriting deals, start to get the demographics, go for a drive, see what's going on, and then you can start duplicate what you established in your first market. So once you establish that and you have enough infrastructure and enough manpower even to do it, then it's doable. But to answer your question, I know it's a bit lengthy answer, but I wanted to explain where I'm coming from. It's tough to do it if you try to do it on your own. So I reckon nail it in the first market, move to the next market once you stabilize yourself in the first one.
Yeah, that makes a lot of sense. And it too depends on what part of the team you play. If you're boots on the ground, you're not going to be boots on the ground in a bunch of places. But if you're, say you're raising capital for syndications, or maybe you're an underwriter, you have the flexibility and being able to join a couple other teams. How much? I'm curious. When you were in
Yes,
Arkansas,
I just I just want to touch on this. Hold your question.
shoot,
Sorry. So the underwriter portion, yes, you can underwrite remotely. It doesn't matter where you are. Like my chief underwriter and friend and business partner, Hun, is a structural engineer. He's a great underwriter. But the advantages of being a really extraordinary underwriter, no matter what you know, how you know to manipulate the spreadsheet in terms of, complexities in the deal and really doing things which is amazing. If you know your market really good, as an underwriter, it makes your life much easier.
sure.
So that's the point.
Yeah.
One of the things that you can do, like three things that you can do in multiple market, no matter where you are, is raising capital. But obviously, you need to know the market so you're able to support you trying to promote that market, if you like. That's number one. Number two is direct to seller. You can do the direct to seller back end stuff no matter where you are. So you can use a VA in the Philippines to do some of it. So that's something that you can do. And the third thing is asset management. Asset management, again, is systems and processes. So those three things you can really do remotely, and you can implement that. Like we got people in MIH who are doing those three things, which is, again, asset management in a certain degree, direct to seller in a certain degree as well, because once you talk, if you do cold calling, it's good if you know the market, because then you can, within the conversation, you can actually drop some nuggets which are relevant to the market. Hey, did you see top golf opening in that part of the city? Or have you heard about this new mall that is going to be converted into something else? So it's very important to know the market. You can drop it into conversation. So again, but those kind of things, like if you do letters or text campaigns or certain things which we teach within the direct to seller, you can still do them remotely, and you don't have to do it only in one market. You can do it remotely in different markets. So those things I mentioned was the direct to seller, the asset management, and what was that? The first one I said?
What's the direct to seller, the asset management, underwriting?
No, underwriting was kind of touch and go. See, I forgot. I talked too much. I'm sure whoever listened will remember.
Yeah, I'll have
so.
to go back and listen. I heard that, but I was taking some notes. The question I wanted to ask is, like, you're talking physically being in the market versus analyzing from a distance. When you were in Arkansas, how much time did you physically spend in that market? Because I know you were doing kind of this, at least in the beginning, stuff by yourself. What do you think as far as that goes if somebody's investing out of where they physically live?
Well, I think when you first going there, you need to be prepared to go there. It depends how far you are. Look, I mean, if you can drive there and it takes you 4 hours, I mean, you can go there. You can go there every month and spend there, in a total of like a week or two. It depends if you got a deal going on as well. So I actually had deals going on. So I actually came in and did some of the closing in the beginning. Now I can do remote closing because I have my attorneys there and stuff that can do that. But I had some circumstances that I had to stay some time. I stayed a month and a half. When I bought those 45 units that I talked about earlier, the closing was delayed and there was problems with some of the owners had some problems with them. And so I just had to stretch my closing, and I called my wife and I told her, listen, I just got to stay. I mean, I don't know what to do.
Sure.
And she told me, just stay. So she was very supportive, so I had to stay. But if somebody is coming to a new market, I think they need to be prepared to go there. If you want to learn it pretty good, depends if you're coming from overseas is one thing, but if you're coming from something that you need to fly to, I suggest in the beginning, you want to go there and you want to stay there. People work as well. So I would say if you're getting deals, you want to be there at least a week a month or half a week a month for the first 6 months.
Sure.
Because you want to meet those lenders,
Right.
which is the most important thing, the lenders and the brokers. You want to meet lenders. You want to stay in touch with them. You want to meet brokers. If you're doing local RIAs, you want to go to those RIA meetings to get a feel to the market. It's not going to work if you want to go there every 3 months for a weekend. It's not going to work. You're not going to form those relationships. Especially in today's market, Valerie, you asked me about an important thing. Today, more than ever, the broker relationship, but more so, and it's coming to even be more important than ever, the lender's relationship is one of the crucial things that will actually allow you to buy deals. Because if lending is going to get tighter and tighter, as we see that it does a little bit now, and what happened in '08 and '09, those relationships could really make or break the opportunity that you might have. You might not be able to take advantage of the opportunities. So you can't form a relationship with the lenders, and they're not going to take you seriously if you're not putting a face to the name regularly, and if they are not seeing you, and they're not going to lunch with you. And more often, they'll take you to lunch, and they'll even want to pay for it because they hold a bank credit card. And they're happy to do it. They probably have an allocation to take clients out. And we do it all the time. You know, we stay in touch with them all the time. It's one of the most important things that we're doing right now in this recession, if you like, is to stay in touch with lenders. Not only so they remember us and they'll support us when we need a deal, but also to ask them, hey, what's the appetite? Anything changed? Do you see any default on debt? Do you see any things that people are distressed? You know, some of your borrowers are distressed. What's going on? What's the bank appetite for multifamily loans? It's very, very, very important to stay current in your market like a local.
Yeah, for sure. I mean, so much good information here, but that's a really good point, you know, as far as the lenders go. Well, Hadar, as I kind of wrap things up here, I am curious if you want to share, what are you focusing on now? What are some of your goals moving forward? Do you have anything specific you're working on or trying to achieve over the next year or a couple years?
Yes, so I got in multifamily, my main goal is to keep my portfolio. I just had to fire a property management company that was underperforming in one of my assets that I own on my own. I just hired a new property manager, so my goal is now to see them going in and implementing the business plan. I mean, the property is almost fully stabilized, but we had some delinquencies, and I think the property management didn't do a good job to monitor those, and some people skip. You know, a lot of people with this downturn, with consumer debt being so high and interest rate being high, a lot of people who borrowed money on credit cards and various things, suddenly the cost of living is going up a lot, especially with inflation. And I think that those property managers as well that I fired, some of the people that they put in there weren't the best qualified. So I don't think they qualified them as good. This is a company that it's not my main company. It's a company in a location that I own only one property. It's a great location, but I think the property management company was lacking. Actually, they were understaffed, so they didn't have they used somebody which was working from an office which was 4 to 5 minutes away. So they didn't really have the boots on the ground from the management perspective to operate my property in the best possible way. So anyway, I'm looking to get this back on track. That's number one. And number one as well is to try and find a deal this year. We'd like to find a deal that we can buy. We're underwriting about 3 or 4 deals a week, roughly. Most of them are off market because at the moment there is lack of stock, there's lack of inventory. Whoever doesn't have to sell or don't need to sell, they're not even putting their properties on the market. Whoever puts on the market, they might be motivated, but maybe the debt, the bridge debt is maturing next year, so they're not feeling the pain just yet, but they're kind of panicking and they're just putting it on the market and they're looking to sell before the debt is maturing, but they're still in denial. So, you know, we're waiting patiently to see what will happen later this year and in 2024. As of today, June 2023. And so we're really looking into that. Hopefully we can get a deal. And that's kind of the real estate stuff that I'm working on. And I'm also, on a personal level, you know, I'm looking to spend more time with my family this year. So we're going to, you know, maybe one or two more vacations. And also to keep practicing my well-being practices that I've been doing, which is my yoga, and I like to meditate as well. And I wanna go back to running if I can. I was injured for a while, kind of problems with my foot. So I'm looking forward to, in some respect, to go back into being more physically active on that respect, with a cardio kind of thing. And that's pretty much me. You know, I try and keep things simple and have a clear focus areas and move forward.
That's awesome. Yeah, you were kind of hobbling around when we seen you in March, I think it was, in Cincinnati. But yeah, I get that leg back together and running again. But Hadar, I really appreciate today. You've added a lot of value, a lot of great information. I personally vouch for the MIH group. John and I have gotten so much value from it. You've poured a lot into it. Marco's poured a lot into it. We deeply appreciate both of you and all the effort. Just the community that you guys have brought together is so valuable. Hadar, if somebody wants to get a hold of you, what's the best way to reach out to you?
The best way to reach out to me is just to visit the MIH Mastermind website and go to the Contact Us page and just send us a message from there. I also happy to say that you can reach me up on Facebook. I'm on Facebook, so you can find me on Facebook. The one with the blue shirt, there's an old account that I can't delete from many years ago. So that one, but the one with the blue shirt, you can message me there. More than happy to connect over there. And Valerie as well. I'm looking forward to seeing you and John and in Florida. So later this month in the MIH meetup that we have in Jacksonville. So looking forward to that as well.
All right. Well, awesome. Thanks so much, Hadar, and you have a fantastic week.
Thank you for joining us today. I'm so grateful that you took the time to invest in yourself and to learn with me today. If you're interested in joining a group of like-minded people, I want to personally invite you to our free networking group where you can make connections and build relationships with people who are working together to generate wealth. Just click the link that is included in the show notes, and I hope to see you there.